Pension plans and mutual funds own about 46% of shares of U.S. corporations. And that's kind of a good thing because it has expanded the benefits of public company ownership to a new level. It's kind of a bad thing in that it created a lot of power for the companies that administer these funds because that's where the shares are owned. So the question I have is, what role, if any, did institutional investors have in the financial meltdown of 2008? And I thought about it because of an article that John Bogle, the guy who founded Vanguard, wrote in the Wall Street Journal, I think it was in 2009. And in that article, he basically said the institutional investors were asleep at the switch. Asleep at the switch meaning that they went for short-term speculative profits as opposed to long-term, does this company create real wealth kind of profit. And also that they rock and rolled with the financial industry and the innovative products that those guys were selling that nobody really understood and didn't really create real wealth. And I've talked about that before, but what I mean is investment that increases productivity or increases jobs or increases the standard of living for everyone, not just traders and quants. The other thing Bogle talks about is he says that the institutional investors did not stop the executive compensation joyride. Now, let me be clear. I do not think that excessive executive compensation caused the meltdown of 2008, but I certainly think it was out of whack. As a shareholder, I have received many a proxy statement from big successful companies like Exxon and Coca-Cola. And these companies, because they're big and successful, are targets for hippies. Hippies who use their shareholder status to make proposals banning the end of everything from animal testing to U.S. foreign policy. Now, I'm no hippie, I hate hippies, but one proposal that I always did vote for, that was for any proposal that sought to get the executive compensation package in line with long-term growth or get it in line with what everybody else at the company was making. Every single one of these proposals were shot down, and I think they were shot down because the institutional investing bloc shot them down. Now, that in and of itself does not make them guilty of the financial meltdown, but I do think there's validity to Bogle's main point, which is that these guys really didn't have the long-term interests of their client at heart. And of course, Bogle proposes more regulation, and I'm not into that. I just think that all investors, individual or institutional, need to get back to basics, and they need to do their homework, and they need to hold companies accountable. It is our money.